Keeping safe from AI-powered crypto scams, a practical guide. In the digital age, where technological advancements accelerate at an unprecedented rate, the introduction of easily accessible artificial intelligence has changed the landscape for many industries. While no one can deny the potential for good that AI brings, it has also breathed new life into old scams. Our partners at CoinStructive, a leading cryptocurrency investigations firm, shared with us key insights on the trends forming and how you can make sure you're not the next victim. If you suffer the unfortunate fate of being a victim to a scam, we will also explain your options in deducting such losses from your income tax return. What are romance scams or pig butchering? Romance scams, also known as pig butchering scams, are a form of online fraud where individuals create deceptive emotional connections with victims to exploit their trust and manipulate them from financial gain. These scams typically originate on online dating platforms, social media, or other online spaces where people seek companionship. The perpetrators, often operating under false identities, develop virtual relationships with unsuspecting individuals, taking advantage of their emotions and vulnerabilities. As the relationship develops, the scammers introduce a fabricated crisis that requires financial help or recommends an investment platform they successfully used to increase their wealth. Common scenarios include medical emergencies, business ventures, or family issues. The victim, who is emotionally invested in the relationship, becomes more susceptible to manipulation and may be persuaded to send money or provide sensitive financial information. How scammers use AI in romance scams. A picture might be worth 1,000 words, but a voice can be worth 1,000,000. Scammers will often steal pictures of attractive people from social media accounts to lure their victims in. But speaking with the right voice convincingly was always a hurdle to overcome. Now, scammers can use AI-generated voices to not only match the sex, but the age and region in which their victim resides. This goes well past voice calls as well. AI can generate live video to accompany the fake voice and carry out full conversations, which only lowers the victim's guard further and builds on the lie. How to spot AI-generated content in romance scams. Watch the mouth. While AI can create an appearance of live speech, there are often slips in the resolution of the mouth region while the scammer talks. The program is trying its best to approximate. Pay attention to timing and nuance in conversation. Scammers like to blame this on internet connection speed, but oftentimes there are gaps in conversation because they are literally typing their text-to-speech answers. Additionally, the scammer may struggle with the grammar or slang native speakers incorporate, resulting in clunky and off-sounding dialogue. How to protect yourself from romance scams. The promise of true love and companionship can be exhilarating, but do not let it cloud your judgment. You may stick around to see if the person you met is the real deal, but the simplest way to stay safe is to follow common sense and not send them money. Why are they asking someone they have never met for financial help? Couldn't they ask their personal friends or family? If they have none, isn't it a little convenient they found you? Would you ever find yourself asking for thousands of dollars from strangers you've never met face to face? What are AI-driven investment scams? Cryptocurrency investment scams have become increasingly prevalent in the digital age. They target unsuspecting individuals eager to capitalize on the booming crypto market. These scams manifest in various forms and employ sophisticated tactics to deceive and defraud investors. One common variation of a scam involves fraudulent IOCs or airdrops, where scammers create fake tokens to promote them as the next big investment opportunity. These illegitimate ICOs and airdrops attract investors with promises of high returns, only to disappear with the funds once a certain threshold is reached. Investors are left with worthless tokens and empty pockets. On the other hand, airdrops entice the victims into signing unverified smart contracts with their Web3 wallet to receive the airdrop, in turn opening an attack vector to have all their tokens in the wallet drained. Another variant shares a lot of common ground with romance scams, but pivots towards investment rather than tragedy. Instead of a plea for help, fraudsters instead offer guidance to invest in crypto through them or a guru they are close with. Also similar to employment scams, they will try to move the conversation into private chat groups in order to manufacture false hype. Through fake platforms, victims are instructed to disclose sensitive personal information and deposit funds. Everything looks great until it's time to withdraw the returns. From there, the platform will demand you owe taxes and fees to receive the balance you see on the screen. These scammers will persist until the victim gives up or runs out of money, at which point they sell your information to other scammers so they can try their luck with you. How AI makes investment scams more convincing. The name of the game when it comes to crypto investment scams is the appearance of legitimacy. No matter the variant of the scam, the victim needs to feel like the website or advertisement they are directed to is the real deal. Before AI, scammers did their best to emulate the look and feel of a legitimate exchange. A keen observer, however, would still be able to spot inconsistencies and errors within the content. AI website generators can bypass this with immaculate and professional grade pages. Additionally, if a scammer hopes to impersonate an existing exchange, they can do so with a relative ease to catch more victims off guard. Advertisements and call to action benefit heavily from AI generated content as well. With the use of deepfake technology, scammers can use existing content from big names and tailor it to their narrative. If you haven't seen an Elon Musk crypto scam video, you're bound to sooner or later. How to avoid AI-powered investment scams. While the future of crypto is bright and potentially lucrative, it does not mean easy money. If it sounds too good to be true, it probably is. If someone contacts you and brings up crypto investing, don't take them for their word. See if what they say passes the sniff test of friends, family, or colleagues. If you don't know anyone familiar with crypto, take your question to threads like crypto scams and see what they have to say. Stay away from private groups. For all you know, every user could be part of a group who are carefully trying to lower your guard. It might even be the same person controlling multiple accounts. While you may not be able to readily spot an AI-generated scam website, you can still pay attention to exchange domains. When it comes to imposter sites, don't assume they are legitimate if there are similarities to the name. The simplest way to avoid this is to not click on a link someone sends you. Instead, find it independently. When it comes to exchanges you've never heard of, but are recommended by the other person, simply turn tail and run. Bonus tip. Exchanges mainly vary via simple metrics like fees, coin listings, and jurisdictions. If someone tells you that the exchange X is the only way you can make high returns, they're baiting you. How do AI-powered phishing attacks work? Phishing attacks represent a pervasive and insidious form of cybercrime, designed to exploit human psychology rather than technical vulnerabilities. Typically carried out through deceptive emails, messages, or websites, phishing seeks to trick individuals into divulging sensitive information such as login credentials, financial details, or personal data. The term phishing is a play on the word fishing, reflecting the attacker's use of bait to lure unsuspected victims. Thanks to countless data breaches, scammers may already have your phone number and/or email address, complete with knowledge or potential accounts you associate with it. From there, it's just a simple poke and prod with misleading notices meant for you to take action by clicking on a link they provide, of course. Once they gain access to your account, they can gather even more sensitive information or use the access they have to drain your balance. Signs of AI-generated phishing emails and text. Just like the fake exchanges highlighted above, phishing emails and text can be extremely deceptive when generated with AI. Scammers will often use official communications from platforms and mirror them perfectly. Your best bet is to spot any grammatical or spelling errors around portions of the message that relate to clicking on links or the given reason for reaching out to you in the first place. How to protect yourself from phishing attacks. It may be a sobering thought, but you cannot trust anything sent to you. Regardless of how legitimate that email or text message may look, you have to assume that it could be a trap. Pay attention to the sending email address and see if it matches earlier known official communications. If a company or service reaches out to you to give notice or instructs you to take action, it is best to contact the provider directly for confirmation. This means using publicly available contact information and not what is listed in the message. Can you deduct crypto scam losses on taxes? Hopefully this article will help you stay safe and avoid losing your hard-earned satoshis to crypto scams. But if you do happen to become a victim of a scam, what can you do? Are you able to get a deduction in your tax return, or have the IRS subsidize your loss? While the answer has not been clearly provided from the IRS, there is some hope. The Tax Cuts and Jobs Act of 2017 significantly changed the deductibility of losses arising from theft or scams of personal property. Casualty losses of personal property are currently limited to losses caused by a federally declared disaster until 2025. Because of this change, there is a lot of confusion surrounding the question of whether crypto scams and theft losses are tax deductible. As mentioned previously, casualty losses of personal property are currently limited to federally declared disasters, meaning that if we assume that cryptocurrencies are personal property, then none of those losses are deductible. The key question is whether crypto is in fact personal property or business and income producing property. How do you report crypto scam losses like rug pulls, abandoned assets and Ponzi schemes? Depending on the circumstances of the loss, you have different options to report losses from scams or thefts. Rug pull losses. If the loss resulted from an investment in a scam coin or rug pull, you should be able to deduct such losses even if the asset has no liquidity and you can no longer sell, therefore realizing a taxable exchange. If you can sell the asset even at a fraction of your cost, you would be able to report this loss as any other crypto loss on Form 8949. In cases where you can no longer sell the tokens, it is possible to use a burn address disposing of the tokens for $0. In this case, the loss would also be reported on IRS Form 8949. Abandoned business property. In instances where you've abandoned a business or investment asset, you'd report this loss on IRS Form 4797, line 10. This form is typically used to report the sale or exchange of property used in a trade or business, section 1231 property, but it also has provisions for reporting the abandonment of property. Theft of business or income producing property. For losses due to the theft of a business or income producing property, you would use IRS Form 4684, section B. The term business or income producing property generally refers to property used in a trade or business or for the production of income. This would typically include business assets such as machinery and equipment, buildings, vehicles, other business property, and investment properties like rental real estate. Investments in cryptocurrencies could be considered income producing property. However, no guidance has been provided by the IRS. Therefore, if you have sustained substantial losses, we recommend consulting with a tax professional to understand the options for deducting such losses. We welcome you to schedule a consultation today with CryptoTaxAudit to learn about your options. It's important to note that the rules are more restrictive for personal property due to the TCJA changes as highlighted earlier. Ponzi scheme losses. Lastly, if you've been the victim of a Ponzi type investment, the tax code offers a specific provision under Revenue Procedure 2009-20, which allows for a potential deduction. However, the safe harbor rules require you meet certain criteria, which typically include an indictment or formal complaint being filed against the scheme's perpetrators. These losses are reported on Form 4684, Section C. How can you keep yourself safe from AI crypto scams? While we can currently protect ourselves from many scams, regardless of their sophistication aided by AI, the scary truth is that they only have the potential to become more deceptive as technology advances. There may come a time when there are no inconsistencies to spot. Therefore, a healthy dose of base skepticism is going to be your best tool in keeping safe. Never take any unsolicited message at face value, and always consider what a bad actor stands to gain from you clicking that link or answering that text. If you've been the victim of a crypto scam or suspect that you might be, CoinStructive can help law enforcement efforts with industry-leading forensic reporting. Schedule a free consultation today to learn more. Protect your crypto and stay IRS compliant. Avoiding scams is only half the battle, and the other half is making sure you don't get blindsided by the IRS. If you've been the victim of a crypto scam or lost funds in a rug pull, CryptoTaxAudit can review your tax options, calculate your losses, and defend you in the event of an audit. Our team specialises in crypto gain calculations, IRS audit protection, and ongoing IRS monitoring. Schedule a consultation with CryptoTaxAudit today to protect yourself before the IRS comes knocking. These are some of the most frequently asked questions that clients have asked us about AI crypto scams. How are scammers using AI to make crypto scams more convincing? AI tools can clone voices, generate deepfake videos, and build professional-looking websites that mimic real exchanges. This makes it much harder for investors to tell what's real and what's fake. Are crypto scam losses tax deductible with the IRS? In some cases, yes. If the scam involves business or income-producing property, you may be able to claim the loss using IRS Form 4797 or 4684. However, personal property losses are generally not deductible under the Tax Cuts and Jobs Act. Always consult a crypto tax professional like CryptoTaxAudit to review your case. What's the safest way to avoid AI-powered investment scams? Never trust links or private groups sent by strangers. Verify exchange domains independently and be cautious of anyone promising guaranteed returns. If it sounds too good to be true, it usually is. How can CryptoTaxAudit help if I've been scammed? CryptoTaxAudit can assess whether your losses may qualify for tax reporting, defend your filings in the event of an IRS audit, and provide forensic support through partners like CoinStructive. This blog post was read by Higgins, Senior Account Manager at CryptoTaxAudit. Hope you enjoyed.